SpaceX is about to make history. It's on track to be the largest IPO ever recorded, with a target valuation of $1.8 trillion that rivals the entire GDP of South Korea. So what exactly is SpaceX? Most people think rockets, and yes, SpaceX has revolutionized space travel, cutting the cost of launching a payload to orbit by over 90%. But here's what most people miss. SpaceX is actually three businesses in one. There's the rocket company, there's Starlink, the satellite internet service that already has more than 12 million subscribers worldwide. And then there's XAI and X, Elon Musk's AI and social media arms, which are expected to be bundled into the IPO. Why is the valuation so massive? Starlink alone now generates over 11 billion in revenue a year. The rocket launch business has a years-long backlog from both NASA and commercial clients, and XAI's Grok is gaining traction fast. Put it all together, and you have a business spanning three of the fastest growing sectors on Earth: space, internet infrastructure, and AI. But the real bet behind that $1.8 trillion number, Starship, the most powerful rocket ever built. If Starship reaches full operation, the cost to launch per kilogram drops from $2,000 to under $100. That's not an incremental improvement. That's a complete reinvention of the space industry, and investors know it. But there are real risks. Elon Musk is the biggest one. His involvement with X has been controversial, and regulatory friction could complicate the listing. There's also the question of whether the valuation already prices in too much of the upside. And then there's the competition. Blue Origin is years behind on reusability. Amazon's Project Kuiper is trying to challenge Starlink, but SpaceX already has over 10,000 satellites in orbit. The lead is enormous and growing. So when does it list? It prices on June 11th and starts trading the next day on the Nasdaq under the ticker SPCX. It would surpass Saudi Aramco's 2019 record as the largest IPO in human history. The S1 is already filed, so the real numbers are public. When it lists, you'll have two options: buy shares directly once it's trading on the Nasdaq, or invest through an ETF, though ETFs may take several months after the IPO to acquire a stake. The most valuable part of SpaceX isn't the rockets, it's the internet. Starlink is already generating around $11 billion a year, reaches over 160 countries, and serves more than 12 million subscribers, and it's barely getting started. So what exactly is Starlink? It's a constellation of satellites in low Earth orbit. SpaceX has launched over 10,000 of them, more than every other operator on Earth combined. Unlike old satellite internet, Starlink orbits close to Earth, which means low latency, fast speeds, and coverage almost everywhere. Farms, ships, remote villages, aircraft crossing the ocean. Here's where it gets interesting for investors. In 2025, Starlink revenue hit $11.4 billion, up roughly 50% in a single year. Analysts now project $18 to $20 billion in 2026. That growth rate is borderline absurd. Starlink reached that same scale in about 6 years from its very first beta in 2020, with no legacy infrastructure, no landlines, and no retail stores. Here's what most people miss about Starlink's position. SpaceX launches its own satellites at a fraction of what rivals pay. Competitors like Amazon's Project Kuiper spend many times more, and they're still not fully live. Starlink already is. Not a plan, not a promise. Over 10,000 satellites in orbit, serving maritime, aviation, and enterprise across more than 160 countries. That is not a head start. That is a wall. So why does Starlink matter for the SpaceX IPO? Because it is the revenue engine. Government launch contracts alone don't justify a $1.8 trillion valuation. Starlink does. At current growth rates, Starlink alone could be worth more than most Fortune 500 companies before Starship, XAI, or SpaceX's launch business are even factored in. This is not a space company anymore, it's a global internet provider, and that changes everything about how you value this IPO. Starlink explains half of SpaceX's valuation. The other half, it's a person. SpaceX is worth $1.8 trillion, and every investor has to answer one uncomfortable question. How much of that is the company? And how much is just Elon Musk? Because when you buy this IPO, you're not just buying rockets and satellites. You're buying a bet on one man. Start with the bull case. Elon isn't a normal CEO. He's the chief engineer. He sets the direction, recruits the best talent in aerospace, and raises billions on reputation alone. Reusable rockets, Starlink, Starship. Every one of those bets was his, usually against the entire industry. That track record is why investors hand SpaceX a premium almost no company could justify. But that premium is also the biggest risk in the deal. Wall Street calls it key man risk. When one person is this critical, the company's value is tied to their focus, their health, their judgment, and Elon's focus is split. Tesla, X, XAI, politics. He may be the most distracted CEO on Earth. We've seen this before. A huge chunk of Tesla's valuation has nothing to do with cars. It's pure Elon premium. When he's in the wrong headlines, the stock moves. Now, lock that inside a private company you can't easily sell. And there's one more layer. Control. Elon holds supervoting shares. No independent board can overrule him. You get the full upside of his genius, and almost no say if it goes wrong. So how do you price the Elon factor? You don't pretend it away. You size it. SpaceX without Elon is still strong. Starlink proves that, but the $1 trillion premium, that's the Elon tax. This isn't a stock. It's a bet on the most ambitious and most unpredictable founder of our generation. You've seen the engine, Starlink. You've weighed the wild card, Elon. So let's say you've decided you want in on the biggest IPO in history. Here's the problem nobody tells you. You probably can't actually buy it, at least not the way you think. Right now, SpaceX is private. Its shares are locked away, held by employees, insiders, and a handful of accredited investors. If you're a regular retail investor, the front door is closed, but there are side doors. The first is the secondary market, platforms like Forge and Equity Zen, where pre-IPO shares change hands. The catch, you usually need to be accredited with steep minimums. The second is proxy funds that already hold a slice of SpaceX, like Destiny Tech 100 or Arkeys Venture Fund. Anyone can buy those, but beware, some have traded at insane premiums to what they actually own. You could be paying $2 for $1 of SpaceX. When it starts trading on June 12th, brokers will dangle IPO access. But understand how this works. The hottest deals are oversubscribed. Institutions get the shares first. Retail gets the leftovers, often right as the first day pop is already fading. So here's the smart move. Don't chase the open. Wait for the lockup to expire, usually 90 to 180 days out, when insiders can finally sell and the price often dips. Then dollar cost average in. And remember the number one rule, size your position. Never bet the farm on one name. That's the whole story. Starlink is the engine, Elon is the premium and the risk, and getting in takes patience, not hype. The largest IPO in history is going to be loud. Your job is to be the calm money.